I think silver is now in a phase where it's going to move a lot faster than gold. And that means that I think the correction is finished now. How quickly we will move up again, we shall see. But I think it could be relatively quick, the first move here, and back up to over 100 and more than that. And of course, longer term, I have been saying that both silver and gold will go to multiples of current prices, but silver will more or less have the gold-silver ratio, which is the gold price divided by silver price, is going to go down probably half or even more in the next few years.
Gold and silver have been under pressure recently, causing many investors to wonder if the precious metals bull market is losing momentum. But what if this correction is actually setting up the next major move? In this video, Egon von Greyerz explains why he believes silver could soon outperform gold, why physical ownership matters more than ever, and why today's market may be giving long-term investors another rare opportunity. Stay with us, because his final warning could change the way you look at gold and silver forever. Now let's hear why he believes this correction is far from over.
Yes, well, the correction was bigger than I anticipated, and I think that most people anticipated. But that's what you get with silver. I often say that silver is not for widows and orphans. It's not unusual to see silver moving like this, and this is why we've told our clients from the very beginning that if you want to sleep well at night, you buy gold only. And that's, for 25 years, that's what we've been saying. But right now, and there have been periods before, of course, when we recommended silver from $20 to $30 to etc. But that right now, we think it's a fantastic opportunity. I mean, I recorded a YouTube video a week or so ago saying that buy silver with both hands. And I really believe that. I think silver is now in a phase where it's going to move a lot faster than gold. And that means that I think the correction is finished now. How quickly we will move up again, we shall see. But I think it could be relatively quick, the first move here, and back up to over 100 and more than that. And of course, longer term, I have been saying that both silver and gold will go to multiples of current prices, but silver will more or less have the gold-silver ratio, which is the gold price divided by silver price, is going to go down probably half or even more in the next few years, which means that silver will probably go up 2-3 times as fast as gold. But it's not going to be an easy journey because of the volatility. We've seen it, from we started at $4, it went up to $20, down to under $10. It went up to, as we know, $50 twice, and then came down into the teens or even 10. And now, for the first time, we have broken the $50 properly since 1980 when it first touched it. But we have to remember where it came from. You say that silver has corrected by 50% roughly since the peak end of January. But we have to remember that in the last couple of years, even at these prices, silver has more than doubled, and so has gold. So we could obviously, if you're a pessimist, you do like the journalists looking at gold and said, well, gold has been a bad investment, and they start with 1980 when gold was up to was $850, and then it crashed to $250 in '99. But of course, nobody mentions that between 1971 and 1980, it went up from $35 to $850.
Yeah.
And so therefore, you can choose any starting point. I mean, silver has done fantastically well. The problem is that when you recommend something at a level where it's come down and is cheap, or before, or even when it hasn't come down, but it's just staying at a lower level, then the public is not interested. The majority of people love buying high and selling low. And even we who have wealth preservation clients see that. You got a massive inflow when gold and silver went up in January, for example. And still, we've been standing on soapboxes for years and years and told them to buy. But people react on price, because that's when media reacts and everybody says, gold is going up or silver is going up. But of course, we went into gold in 2002 and silver, but on a much smaller much smaller proportion. But we went in because at $300 we said that gold was unloved and undervalued, and that's the time to buy an investment when nobody wants it, but it still has massive value, massive potential. And that's the case with silver now, in my view, that this is no one, of course, people who have bought it at $120, they're scared now, and probably many of the short-term traders have got out. But if you're looking at a long-term wealth preservation perspective, this is a fantastic opportunity, again, to pick up silver at almost half what it was, what it is. Well, obviously, it's 75 now, roughly.
Egon von Greyerz believes the recent decline in silver has frightened many investors, but he argues that this is exactly how silver has behaved throughout history. Sharp corrections are normal, and in his view, they often create the best long-term buying opportunities. While gold remains the foundation of wealth preservation, he believes silver could outperform gold during the next phase of the precious metals bull market, as the gold-to-silver ratio continues to decline. His biggest message, however, goes beyond price. Egon argues that investors should focus on owning physical gold and silver, rather than relying on paper exposure. He believes today's financial system is heavily dependent on paper assets and leverage, while the amount of physical precious metals available is far smaller than many investors realize. He also explains why most large financial institutions continue allocating client money towards stocks, bonds, and other financial products instead of physical metals. According to Egon, those institutions have little incentive to recommend significant gold or silver holdings until confidence in traditional markets begins to weaken. Looking ahead, he expects persistent inflation, rising debt, ongoing money creation, and pressure on conventional assets to gradually push more investors toward tangible stores of value. In his opinion, many people will wait until after markets begin struggling before seeking protection, even though history shows that the biggest opportunities often appear before the crowd recognizes them. For Egon, the recent correction doesn't change the long-term outlook. Instead, he sees it as another chance for disciplined investors to accumulate physical gold and silver, while sentiment remains cautious. And that's where his strongest warning about the future of traditional financial markets begins.
There is in gold and even more so in silver, there is a massive amount of paper contracts outstanding. And any clever person or investor or government who can speak the truth, because no Western government can ever speak the truth. They have to lie to the people all the time to get re-elected or get elected in the first place. That is the essence of a politician. You have to lie. And I want to get back. It reminds me when we talked about Morgan Stanley and 20% and Goldman Sachs in gold. That's what the analysts are saying in these banks. But don't believe that any of the investment managers in these banks are buying gold or silver up to 20% of the client's holdings. Nobody is. We see no major move at all from these banks up to those levels, because number one, clients primarily want excitement, which is stocks, private equity, etc. Stocks always go up. First of all, that's what they believe, and secondly, banks have no interest whatsoever to offer physical gold to their client portfolios, because they can't earn enough money on it, and they can't churn commission. So that's why no asset manager, no wealth manager, no one managing money in a bank will ever recommend gold to any major percentage, because that's going to affect their bonuses at the end of the year, and that's the only thing that they're interested in. So therefore, we are not seeing that move yet up to 20%. That's only going to happen, and I expect it to happen, when asset markets collapse. And I think that there is a high probability that asset markets will start coming down in a major way, start the latest. So especially stocks, of course, but also other markets. Bonds will also come down because interest rates with inflation are going to be pushed up all the time, and the Fed will try to stop it, but they can't, because they will, at the same time, they need to print more money all the time, and all the central banks, and printing more money means, of course, interest rates going up and the currency going down. Therefore, I expect major moves in markets starting in the autumn, and then we will have that. I still expect, as I have said for a long time, I still expect these conventional asset markets, stocks, bonds, property, etc., to come down by between 70 and 90 or even 95% against real assets such as gold and silver. And that I believe that very firmly. And of course, that there will be a point initially, of course, everyone will buy the dips, as they always have, because Fed is always going to come in, or central bank, to save us, and they will try by printing more money. But that will not last for very long. And then the end result will be that at some point fear will come in, and people will then say, we got to protect our wealth, we got to have some real protection. And that's when they will start gradually and slowly buying gold and silver. And I think at the end of this era, if we see falls in real terms, as I have described, of the percentages I just described, then I think at the end of this era, people will have more gold and silver than they've had for decades, as a percentage of world financial assets. And of course, part of that is also that other assets have come down in price automatically. They will have more gold or silver because other assets will be cheaper. And I think at the end of this era, I would not be surprised to say that all investors will say, and all investment managers will say, we need to keep at least 20% of gold and a bit of silver at the bottom of our wealth pyramid, again in physical, of course, in order to protect against events that we've seen now.
Egon von Greyerz' message is clear. Don't let short-term volatility distract you from the bigger picture. If his outlook proves correct, today's uncertainty could become tomorrow's opportunity for long-term gold and silver investors. Do you agree with Egon's view? Is this correction creating one of the best buying opportunities? Or do you think precious metals have further to fall? Let us know in the comments below. If you enjoyed this analysis, please like this video, subscribe to the channel, and turn on notifications so you never miss our latest updates on gold, silver, and the global financial system. Thanks for watching, and we'll see you in the next video.